Let me welcome on board Jugeshinder Singh. He's the Group CFO at Adani Enterprises. He joins in the show right now. Mr. Singh, good to have you on the show. I'm just looking at your numbers. Your airport segment has registered a significant EBITDA growth as compared to the previous quarter. The question, of course, is whether it's sustainable or not.
We took over the Mumbai airport in August, in July 21, and the operations from the middle of July, and also completed the acquisition of Jaipur, Guwahati and the Thiruvananthapuram airport as a part of the original 6 bids we had won in 2021. This was completed in October. On the financial notes, total income for the half year rose by 78% to 26,328 crore. In line with the income, EBITDA also grew by 77% to 2,210 crore. The consolidated profit after tax attributable to owners increased by 23% to 484 crore. We also have an announcement in relation to the changes in our governance and board charter. Those changes relate to establishment of a new committee called the Corporate Responsibility Committee, which will act as an audit committee for ESG matters. This committee will be 100% independent directors and chaired by independent director. Further, we have changed the charter of the audit committee. Over and above the regulatory requirement of 75% independent, all the audit committees of AEL will be made up of 100% independent directors and chaired by an independent director. This change in the audit committee also applies to any listed vertical of Adani portfolio as well.
Right. Could you elaborate on the revised board charter with ESG focus?
Yeah, so the main focus around this is that our investment plan for ESG means that even at AEL level, majority of our capex, as announced by our chairman, approximately USD 50 billion to 70 billion will be invested over the next 10 years in relation to the renewable portfolio. Now, 20 billion of that will be invested by our portfolio company Adani Green Energy, but 50 billion of this investment will be in the new development for hydrogen and green metals, which will be 3-part investment. We will establish a new vertical for renewables, which would be focused on the green hydrogen, and that will include the entire manufacturing ecosystem, which we will take to about 10 gigawatt total. Currently, about 3.5 gigawatt of cell and module lines are in progress, 1.5 completed, 2 gigawatt under development. Also, all the ancillary work, which is like glass factory, back sheets, aluminium frames, and wind blades, wind turbine, electrolyzers, wafers, ingots, and polysilicon. So this entire ecosystem will be 10 gigawatt each. This will be developed. Secondly, we'll develop the energy infrastructure for producing green hydrogen. That will include power generation, to ability for electrolyzing, and then transportation of hydrogen. Third ecosystem will be to convert this into hydrogen into green products, which will be urea, metals, and the further product chain which will arise from ammonia.
That's as far as the broader charter goes, as far as ECG is. Mr. Singh, good morning. It's Nentara. Can you share with us and our viewers which are the new segments that you all are looking at, and which could be these segments and new businesses that would be incubated by Adani Enterprises?
Basically, Adani Enterprise is an incubator. So the 2 core areas we work is in utilities and energy, and transport and logistics. And that area will not shift. We will have ancillary development, like for example, specialized manufacturing, could be for defense, etc. Mining services, which has historically been a big part of Adani Enterprise, will remain so. But overall, Adani Enterprise focus has always been on the 2 core areas that we operate under. Now, the biggest area for Adani Enterprise going forward will become the incubation of the second vertical of our renewables business. Our first vertical is already listed as an independent company, Adani Green Energy Limited. The second vertical, which relates to the hydrogen supply chain, which relates to the ecosystem of supply chain integrity in terms of polysilicon all the way to cell, all the ancillaries, electrolyzers, etc., and then hydrogen to ammonia and other products. So these are the three areas we'll develop, and this is where our biggest investment is going. Over 50 billion over the next 10 years, which means that our total investment across our portfolio of companies is now primarily in the area of renewables, and it is reflected in Adani Enterprise also, being the biggest new incubation on the energy side, which is the renewable green hydrogen economy.
Mr. Singh, you know, there was a recent media release as far as the Adani's plans go for green hydrogen, and which has been enumerated in the Global Investor Summit hosted by the UK government. I know you've given us a slight broader charter, you know, going into the 10-year program as far as the ESG standards go. But tell us more about this.
The basic, it's not, see, our change to renewable focus and our shift towards renewable infrastructure started in 2015 with independent listing of Adani Transmission and then focus on the development of Adani Green Energy. So we started long time back, but our main focus comes from chairman's view that the climate risk and climate disruption is a major risk that India faces, and therefore Indian economy faces. So what we want to do is to play our role in addressing this risk, and therefore in line with the commitment made by Honorable Prime Minister in COP 21, which was related to the Paris Agreement, we are fully committed to support India's desire to be a leading participant in the transition to clean and renewable energy. So our focus is just aligned because we are a core infrastructure player and core infrastructure investor, core infrastructure owner. So therefore, naturally, we align with the core infrastructure requirement of the country, which is now moving to renewable as per the government's direction. So that's where naturally our capex and our investments are now going.
Okay. And with that, Mr. Singh, we are out of time. I'd like to thank you for joining us here on today's edition of The Market and taking us through all of that.